Welcome to the Mint Report, our wrap-up of the day's business news. Here are the top stories. HUL posts better than expected profits but warns about future challenges. Uninor says exiting India is only a last-ditch option. And markets rise for a fifth straight day. First up, India's biggest consumer goods company has posted better than expected numbers for the third quarter, but it's warning investors it faces new pressures that could put a dent in its volumes. Starting with the good news, net profit climbed 18% to 754 crores. Net sales, meanwhile, climbed 16% to 5,850. And that came along with a volume growth of 9%. But investors weren't enthused. For one, HUL said its advertising and promotional spends had gone down 7%. Also, the company's CFO said inflationary pressures were expected to rise and commodity prices would remain volatile. Not surprisingly, traders dumped HUL stock, sending it down 3.5% on the BSE on a day the Sensex rose 0.6%. In other news, telecom firm Uninor says exiting India is only an option if no solutions are found to its current challenges. Sigve Brecky, the firm's managing director, says there are no plans to wind up business or ever slow down. He added that Uninor was working under the assumption that the spectrum issue would be sorted out. Last week, the Supreme Court had cancelled 122 telecom licenses of 9 firms, including Uninor. The company says it will campaign to get back its rights to operate in the circles it's losing. And finally, Indian markets shot up on Monday, marking their fifth straight day of gains. The Sensex rose 102 points to 17,707, and the Nifty went up 36 to 5,362. Banking stocks did better than most, with the outlook for the sector looking good. Shares of SBI jumped 2.85% on the BSE to 2,163, and ICICI Bank rose nearly 1.5% to 928. But HDFC Bank remained flat by the end of trade at a little over 500. Auto stocks also made advances in Monday's trade. Tata Motors gained 1.25% to 251, and Maruti Suzuki accelerated ahead 1.55% to 1,253 rupees and 60 paise. And that's all we have for you. Thanks for watching.